insurers have been successfully navigating a difficult environment, but country risk does remain a factor for companies in this market. I'm Yvette Essen for AM Best TV, and I'm joined by Alex Rafferty, Senior Financial Analyst, to talk about our recent report. Alex, can you describe some of the challenges that insurers are facing within Lebanon?
Some of the key challenges faced by insurers in Lebanon are the fragmented nature of the market, which contributes to a highly competitive marketplace as a wide number of insurance companies vie for market share and generate price competition. Another competitive factor is the role of intermediaries and indirect distribution channels, which play a large role in the market. This detracts from insurers' ability to generate significant brand loyalty with end consumers and amplifies the price sensitivity of end consumers to the solutions offered by their intermediaries. Another challenge faced by insurers in the market is the role of caisse mutuelle, or mutual companies, who are not regulated by the insurance regulator in the country. These companies, particularly in group medical, are able to offer highly competitive rates and also distort the market environment. Should regulatory changes be enforced, they would not be subject to them.
One thing that the report does draw out is that Lebanon is classified in country risk tier 5, which is AM Best's highest classification in terms of political, economic and financial systems risk. Can you explain to me a little bit about what this means for Lebanese insurers?
The elevated country risk environment is a negative credit factor for the market. The elevated country risk has the potential to disrupt day-to-day operations for insurers, and it also has the potential to introduce volatility into performance and financial strength. Some of the key factors impacting Lebanon from a country risk point of view, I'd say, is political uncertainty. The country has a history of political divide, and more recently was without the president for 2 years, which has added some barriers to legislative and regulatory reform. Another factor which has influenced the country risk environment is regional geopolitical and regional conflict, notably in Syria. This had an indirect effect on Lebanon as regards economic progression. The country, having dragged its economic performance in recent years, has also led to a reduction in business and consumer confidence in the country.
You've touched upon how fragmented the market is in Lebanon. What do you foresee going forward, certainly in terms of regulation? Is there likely to lead to more market consolidation?
The marketplace in Lebanon is fragmented. There's a large number of insurers competing for the business available. Regulatory reforms which have been proposed on the table include increased solvency regulation, more stringent solvency requirements, which, if successfully enforced, could lead to market consolidation, as smaller companies may seek to combine or to merge in order to meet the scale required to comply with more stringent capital requirements. Additionally, if regulatory reform is enacted and is supported by increased governance and increased risk management requirements, there's increased onus on companies to increase their internal capabilities in order to comply with wider regulation.
A copy of AM Best report on Lebanon can be found on ambest.com. For AM Best TV, I'm Yvette Essen.